Hello and welcome to this video in which we will be discussing the potential impact and outcome of the US presidential election in 2024. The vote takes place on the 5th of November, and in January, either Donald Trump or Kamala Harris will be moving into the White House. Now, they have very different outlooks and very different plans. So to discuss what a Trump win or a Harris win might mean, I'm joined today by Schroders economist George Brown and head of multi-asset for the Americas, Adam Farstrup. So this is what they're playing for. These are the points they want to win. How are they going to do it?
The presidential race, it's not a popularity contest necessarily. It's not about winning as many votes as you can nationwide. Instead, because of the Electoral College, we can see that behind here, it's about capturing enough of these states in order to get over the line. And that line that you've got to, or the magic number is 270. You've got to get 270 states. Now, of those, some of them are Republican leaning or Democrat leaning. And in the middle, we've got these sort of swing states that can go either way. And these are here on the screen behind us. And you can see that traditionally, or at least in this election, there's a sort of 6 swing states: Nevada, there, Arizona, Wisconsin, Michigan, Pennsylvania, and Georgia, and maybe North Carolina as well, which we'll come on to later. But the key swing states are here, and it's all about who can pick up enough votes here to get them over the line. I guess in terms of those Republican-leaning states, Trump has the advantage there, because I think it's on the next slide, that we can see here that Trump has about 235 votes if we consider those sort of likely or leaning Republican states, whereas Harris, she can rely on about 226 votes. So Trump has more options there in terms of those swing states, but it's all about who can capture enough of those winning combinations, I suppose.
And that's the big shift in the dynamics that we've seen with Harris coming into the race, because a lot of those swing state polls were really starting to become less of a swing state and really moving towards the Donald Trump corner. Now we've seen that tighten back up very significantly. And it's going to be a horse race down the stretch. I think it's very interesting that when you look at the campaigns, Pennsylvania, which is known as the Keystone State, really is a keystone for the electoral chances of these candidates. Because by winning Pennsylvania, whoever wins Pennsylvania has many more options now as they start to put together that winning set of these swing states. And of course, it's interesting because when you look at the campaigns themselves, if you want a validation of how important Pennsylvania is, if you look at the spending on ads by the campaigns, by a country mile, Pennsylvania is in the lead for both campaigns. If you look at both campaigns and the schedule for their candidates, they are spending by far more time in Pennsylvania than the other swing states. And so, as some of our colleagues who live in Pennsylvania will say, if you live here, the only commercials that you see are political ads right now.
And is there a scenario in which either candidate can win without Pennsylvania?
There are scenarios that a candidate can win without Pennsylvania, but it would take, I think, a quite extraordinary turn of events. So certainly for Kamala Harris, Trump has a better chance of winning without Pennsylvania. But for Kamala Harris to win without Pennsylvania, then she really has to win not only the northern states, Michigan, Wisconsin, she needs to bring across really Nevada and Arizona. Then she could win without Georgia. It's hard to see Georgia going for Harris without Pennsylvania being competitive as well for her. Not that they're the same states, the makeups are quite different, but that just feels like an election anomaly that somewhere actually as traditionally Republican as Georgia going for the Democratic candidate without Pennsylvania.
Mm-hmm. Let's just talk briefly about North Carolina here. It's in a slightly different color to the other traditional swing states, and that is because it hasn't been won by the Democrats since 2008 when Obama won it. It's traditionally very Republican leaning. So what's changed this time around?
So I think there's a couple of demographic explanations for this. So when you look at the base that favors Harris and is more open to her, some of the urban areas within North Carolina that have been growing, she seems to be performing more strongly in than Biden was. There's a variety of reasons for that. But remember, we have this sort of intra-United States migration that's happening. And so, the Sun Belt has been growing with populations from maybe more traditionally Democratic states. And so I think Harris is appealing to sort of a broader group within North Carolina that sort of fits that profile.
And just briefly, we've got 77 in the middle here, 270 win. If there's a tie, what happens?
It goes to the House. But it goes to the House in a sort of very specific apportionment of how they would then vote to break that tie.
Yeah, and it would be the newly appointed House as well.
Yes.
And I would say in most instances the Republicans would have the advantage there. So in terms of looking at that kind of split, in most scenarios you'd imagine that that would favour Trump.
And just before we move on, I guess we just need to address the ones that are mixed here. We've got Nebraska and we've got Maine. They obviously split their votes proportionately depending on the vote that comes in. But it's not necessarily an even split, is that right?
Yeah, Adam, do you want
Yeah, so it's based on congressional districts. So in Nebraska, for example, there is a congressional district around Omaha, being an urban district that tends to vote more Democratic. And so there's a potential that the Democrats could win that single congressional vote from the Omaha congressional district.
Let's talk about the Federal Reserve, this big building behind us. There was a recent cut of 0.5 percentage point. That might be bolder than some people were expecting.
Yeah, the latest decision from the Federal Reserve was obviously quite bold. I think it's fairly unprecedented in terms of that sort of action. And in terms of what they're signalling, of course, they're suggesting that they're going to be cutting right through to the end of this year and getting to where they think neutral is by, I think, 2026.
Okay, so if we can bring up the faces of the people who vote for that cut. One person here didn't vote for that cut, Michelle Bowman. What's going on there?
So there's obviously a debate, not just amongst the Federal Reserve, but I guess amongst economists about whether or not 50 basis points was ultimately necessary. Now, certainly at Schroders, our view is that the economy is appearing rather solid. And I think if you actually look at the dot plot, so the dot plot, by the way, is what the FOMC it expects is going to be the appropriate path for interest rates. Alongside that, we've got the summary of economic projections, that's the forecast. Now, they didn't actually change the forecast materially. They still are looking for 2% growth this year, which, looks a little bit surprising to me because to engineer a 2% growth, based on the data we're seeing for Q3, we're going to have to get a sharp contraction in Q4. So clearly there's a debate amongst the committee, and for at least one member of the board, it seemed to be that actually 25 basis points was the more appropriate action given that solid backdrop that we're seeing.
And when we factor in the election, obviously we've got the 5th of November as the vote, no president takes over till the 20th of January. How might that affect the way that the Fed makes its decisions in the future?
Well, it'd be interesting to hear Adam's thoughts in a bit, but from my perspective, I think the Fed's overall objective is to try and not be seen as political at all. So I think they're going to be not making any commentary on that regard. But certainly, when we've modelled the impact of a Harris versus a Trump presidency, our view is very much that the Trump presidency would be reflationary. And I think for the Federal Reserve as well, I think they will agree with that narrative. And I think based on that, it might just give them more pause for thought in terms of the pace of cuts. But I think between now and January, it's not going to have a huge impact because of that wanting to avoid coming across as being political. It's more of a question, I'd say, for 2025 and maybe 2026.
These people's time in their roles all come to an end at a different point. So is there any relevance to when their terms end?
There is, because Trump's made it very clear that he doesn't want to renominate Powell when his term ends, which is in May 2026. Now, in terms of the current structure about how that would go about being changed, he could either look to another member of the board to appoint them as the next chair of the FOMC. But alternatively as well, we've got Adriana Kugler here in the bottom right. She's a Democrat. Her term ends in January of that year. So he could seek to replace her with a Republican, or at least someone who's more favorable to rate cuts. But what I would just say is that the difficulty for Trump is if he's wanting to appoint someone who's much more amenable to rate cuts, he must still do so by passing it through the Senate. So you need to get a simple majority through the Senate in order to be appointed. But we saw during his first presidency, he struggled with a number of candidates when he was trying to appoint them to the Federal Reserve Board, somewhat more unconventional economists. And so I think this time round, he's going to face the same issue because even though the Senate looks like it's going to go Republican, it still looks like it will be a slim majority. So even just a couple of Republican dissenters will be enough to block any nomination to the Federal Reserve Board.
We'll talk about the makeup of the Senate and the House a little bit later, but I thought at this point we could talk a little bit about the S&P 500 and how that performs under any potential president, whether that is unified or divided government. So perhaps you could just explain those two different scenarios under each party.
I think people like to look at this data. Politicians like to talk about this data. So the Democrats often like to point to this historically and say, actually, the performance of the stock market under Democratic president is better. I think it's really hard to actually link that to policies. There are so many factors that impact the starting points, end points. And what's interesting is I think, if you just look at the split in sentiment right now, it's very clear that business confidence, particularly small business confidence, is higher for a Trump administration than it would be for a Harris administration, an assumption of much lower regulation. So, I think you can look at these patterns and think, yes, I can see this history of excess returns. I think it's very dangerous to make an investment decision based on that. You really have to understand all of the influences that are impacting it.
Mm-hmm. We can get a little bit more specific now in terms of growth and inflation. We've got this forecast here. There's obviously a big spike under a potential Trump win in 2026, but also alongside that comes a spike in inflation, whereas under Harris it's predicted to flatline. So could you maybe just delve into some of the detail here?
Yes, so very briefly on this, if Harris was to be elected, it looks like it would be either with a divided government or a very slim majority, and that effectively is going to be a big block to any legislative agenda. So we see the economy reversing more to its equilibrium, hence why we've got growth at about 2%. But the latest Fed decision, if they're going to go with this aggressive easing that it looks like they're going to, well, it looks like we're going to push up our 2025 forecasts. Trump, on the other hand, it looks like he will get a majority if he is elected in Congress, and that will help him in terms of the legislative agenda. Obviously, he's pushing for immigration restrictions and pushing for higher tariffs, but also, as Adam mentioned as well, the deregulatory agenda as well, which is going to be pro-growth. All of these factors we think are going to push up on growth for Trump, obviously with the usual lags that comes through in 2026 and 2027, but of course the flip side of that stronger growth, because of those tariffs, those immigration restrictions, we think we're going to get higher inflation as a result.
Mm-hmm. Adam, anything on that?
I agree with what George said, other than, as always, there's a path of uncertainty around this. So depending on how those tariffs are implemented, depending on, I think actually the deregulatory agenda could move very quickly. Trump has shown his willingness to really utilize the powers of the executive office in order to sort of advance that agenda. I think he's practiced at it. So I think there's a lot that has been put in place to move very quickly on that. And the tariffs likewise. But some of the other policies, the tax policy, he's going to have to compromise a little bit, particularly if you do end up with a split Congress, right? So you have, as George said, it looks very likely the Republicans will take the Senate, but there is a very strong possibility that the Democrats could take the House. And in that scenario, he's going to really have to negotiate over the extension of his tax cuts. Mm-hmm. And so the form that takes can impact that specific path of growth a little bit. So again, we have to watch as these things start to develop and understand the specific mechanisms.
Yeah. We can look now at a bit of a market breakdown in terms of sector performance. This is under a Trump administration and under a Biden administration as they have happened. Obviously, we have a bit of a disparity here in energy. Do you want to explain that before we go any further?
I think it's interesting. Before we showed you these numbers on the page, if you had done a bit of a mental exercise and said, think about these major sectors and how did they perform under the Biden administration and under the Trump administration, what would you have expected to see? And I think from a policy standpoint, you would expect to see, energy. I think energy would do very well under a Republican administration who's very friendly to permitting, to deregulation, to seeing sort of that export growth. And in fact, it's been the opposite. Now, a lot of that explanation, right, has to do with COVID and the disruptions that we had during the shutdowns from the pandemic and that specific start and end point. And so I think the message for people to take away from this is this idea that really there are so many factors that can impact the performance of specific segments of the market. And you really have to separate, particularly in this time when lots of people are around talking about Republican baskets of stocks and Democratic baskets of stocks. They may reflect some of the policy expectations, but you have to separate the idea between a trade and an investment rationale and understand all of the drivers that might impact that. One of the ones that may be less surprising is the consumer discretionary, for example. Here, to the extent that we do get the higher growth in the economy that George and the team are forecasting, it wouldn't be surprising to see consumer discretionary continue to do well. Consumers will feel pretty good. Unemployment's likely to be lower, particularly if we have stricter immigration limits. But what's the flip side of that, right? Are those stricter immigration limits actually going to reignite inflation? Are they going to cause service prices to start going up again and suddenly people are feeling pinched? I have a job, but look how much dinner cost me again. We really don't know how that's going to play out. And so our message is always that it's important to really think through this, both from the top down and at a specific granular level to understand how it's going to play out over the full investment cycle.
So let's talk about down ballot voting. So in this case, it's anything below those two presidential candidates on that paper ballot that people are going to fill out. So we have, obviously, the House of Representatives and the Senate. These are all the different scenarios. What's going on?
Well, I think, first of all, what's going on is this has a lot to do with why Biden is no longer the candidate and why the Democratic Party placed the pressure on him that they did to withdraw from the race, because it was becoming very clear that not only was Trump in the lead for the presidential election, but he was, Biden's weakness was really starting to impact these down ballot races. And a year ago, the expectations were that actually, the Senate's always going to be a very hard game for the Democrats this year. If you look at the map of who's up for election, remember the Senate, 6-year terms, so it's quite staggered in how it rolls through. Whereas the House, everybody's up for election. The House, there are a number of reasons to think that the Democrats can be quite competitive in this race. And they were starting to see that move away from them. And I think that led to a lot of the pressure. So I think the likelihood of a red sweep, in my mind, is much higher than the likelihood of a blue sweep because of the Senate, right? It's very hard to see, if you look at Jon Tester in Montana, it looks very difficult for him. You've had Joe Manchin retiring in West Virginia. West Virginia is massively pro-Trump, pro-Republican at this point. So there's no expectation that the Democrats going to be competitive there. So you really start to see that narrow advantage that the Democrats currently have in the Senate moving away. It's really going to be the House. And so certainly the Democrats have a lot of attention on trying to win the House, because in either scenario, if you have a Trump presidency, the House can serve as a brake on some of the policies that they will be opposed to. And Kamala Harris is going to have an easier time negotiating with a Republican Senate if she's got a Democratic House to help her keep things moving along.
I think it's interesting. Obviously, a lot of the media conversation around this election is all about the two candidates and what they're doing. And obviously, we get the polls almost weekly to reflect that. How much can this race change between now and Election Day?
Again, I think the Senate, it's hard to see that really dramatically changing between now and the Election Day. I think there's individual races where you could have surprises, but the balance of it. In the House, it's a large number of people that are up for election, and there are quite a lot of scenarios that can play out depending on what turnout you get on the day, depending on, we always talk about the October surprise. And so as we go through October, events can happen, as they already have. Who would have expected 2 assassination attempts on a major candidate for the presidency over the course of this? And so you always have to be prepared for the circumstances to change.
Of course.
Yeah, I totally agree. So, and just to add to that, it's not just with the race, but beyond that is also the latest Federal Reserve decision, for instance, a surprise 50 basis point cut relative to, let's say, a few weeks ago. Whether or not, let's say, the economy takes a turn for the worse, or off to the flip side of that, gasoline prices as well play into the mentality quite strongly amongst a lot of Americans. There's lots of different factors at play. And so as Adam says, I think we shouldn't take anything for granted at the moment, particularly in this election cycle.
Perfect. Thank you both so much for your time. The three of us will be regrouping in November to go through those results and unpack what that all means and looking ahead to 2025 and beyond. So do join us for that then.